Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar has portrayed a 6-day mixed price action, having found the resistance around 69.95 after seeing at least 4 consecutive sessions to challenge us. The market has come back with an engulfing candle to the bullish case, a weak one at that. As long as we maintain beneath the level of 69.95, I feel that we are continually likely to hold within the boundaries of 68 to the top side level around 70 cents. Looking ahead, we've got the RBA Governor Phil Lowe's speech, which may provide further clues about the likely monetary policy action that we could see in March. Along with that, we do have Tuesday's US Consumer Price Index report, which may show how bad inflation was at the consumer level in January. The projected headline CPI is forecast to have risen by 0.5% on a seasonally adjusted base at the outset of the year. That is, clocking the annual rate to 6.2%, representing a further slowdown from 6.5% from the previous release. And along with that, we did have last year a peak around 9%. We also got retail sales on Wednesday as well in the US, and no doubt we've got much volatility to come. So keep an eye on the technicals as they are somewhat failing, and if we do see a retreat from 69.95, then I expect to see a pullback to 68 cents, where the 60-day moving average is. Looking at the euro, the market found a little momentum in front of the key support level of 106.20 overnight. However, the lackluster price action still remains a bit of a question mark if it can continue, as the dollar index, which measures the greenback strength against a basket of 6 major currencies, is consolidating around 103.15. If we find the momentum does increase following the figures from the US inflation data, that is, the dollar will rebound and therefore will reverse the recent gains and look back towards the bottom side of the range around 106.20, and with a cap seen on the top side around 107.80-90. We took another look at that key level overnight at 132.80-90 for dollar yen, but retreated somewhat. Nevertheless, the technicals are still holding bullish in terms of the RSI and also the MACD, and a slight trend that's coming through here to the bull case for the ADX. Therefore, I won't rule out at this present point and see if the market can clear the 132.80-90 level, and if so, would give further indication to the upside and expose the region of 134 to 136 as a trajectory target. Market is still waiting for the new Bank of Japan governor, however, it is dragging on somewhat. But still, keep an eye on the headlines in case we do get an update. Looking at sterling, the market is now back to test that level of 121.45. We did see a rejection from there overnight, but the engulfing candle has put a little bit more of a firmer step with the RSI, and a break would give a squeeze up to 122.20 before likely seeing these gains reversed. If we see a rejection from 121.45, the initial support still remains at 119.45. Looking at gold, well, we finally took out the level of 1,860 overnight. And with an intraday low today of 53, the market is attempting to reclaim some of its losses. However, holding heavily to the technical side, to the bearish case, along with a weak bearish case from the ADX to support the trend, that we may see further weakness towards 1,848, and with an objective of 1,820 to 26. To reverse this, though, we do need to see a break above the top side, which is seen now at 1,876, and therefore negate the call to the downside and reinstate the call to around 1,900. Finishing up with oil was a little bit mixed overnight. Nevertheless, the market is still maintaining somewhat a bullish case, but weakening, to keep an eye on this. I do feel that we could still stretch towards $82 a barrel, while the key support level around 76.90 is intact. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the rest of the day.